Okay, so I started that video on my thoughts for 2024, and I was planning on doing some sort of charts with that, but I just ran out of time. And quite frankly, I don't have a lot of time this afternoon. I'm just going to give you 5 minutes of my thoughts on current positions and what I think might unfold during the next 6 to 12 months, and then how we can sort of structure our trade ideas around that. So just bear with me and give me that chance. Let me just go through these first of all, starting with currencies. And I'm going to talk about the dollar index. Now, a lot of people have given up on the dollar because of central bank currencies and the talks of that and de-dollarization and so on. My general view on the dollar is that it will continue to retain some strength. I think fiat currencies generally are devaluing, hence inflation and the appreciation of other assets like precious metals. But I think overall, amongst the fiat currencies, the dollar is probably going to remain king, and they'll all do more or less the same thing relative to each other, not a great deal of change. I think overall we will see a gradual devaluation of the dollar, but not rapidly and not sudden. So as this has corrected, this is the dollar index day chart, I think we'll start to see some bounces. You can see I put this little tweet up a couple of days ago. There's the bottom of the move. We're at the 78.6% fib thereabouts right now, and it is bouncing a little bit. And I think we could see the dollar meander back into here. And overall, I think into next year, we're going to have to see the stock market do a little bit of appreciation next year. And we're going to have to see the dollar retain some strength. Not, I think, generally in terms of the market, but in terms of the way the politics, and not only the politics of the politicians, but also those that back the politicians and where they get all their money from. So I think it's in everyone's interest that the dollar retains some strength to avoid serious inflation returns with commodity prices and particularly energy, and also that the stock market remains buoyant. But I think we will see some minor corrections, and I think we're probably about to see one now, but I don't think it's going to be too deep. We're trading within channels on stocks and all sorts of other things, commodities and currencies, and we've got a channel here on the dollar index. I think we may bounce, if not here, then a little bit lower down, back up into these moving averages, back up into this range, and perhaps we'll see some sort of very slow staggered drop in the dollar, and that will then affect all the other currencies, and we'll have to trade this pretty much like range trading. For example, now we're long on the dollar and we're short on the euro, as you can see from these sort of demo trade positions that I've got showing on the charts here. There's the position we shorted the euro at the top there, heading down towards the support. But we won't be short this for too long. So overall, I think into next year, I think we can expect some buoyancy in the dollar, but not too much. We don't want to see the dollar affecting the stock markets too much negatively. And inflation, interest rates, stock markets, elections, all of that, and the need for certainly some positive news on behalf of the Democrats and some serious money and backers behind the Democrats, I think we'll try and keep this all a bit propped up. So not too much range in the dollar, and not, I think, a gradual depreciation overall in the next 12 months. The same thing with the stock market. Not too much depreciation, some dips followed by a blowout rally, and then eventually, perhaps even when the Fed starts cutting next year, and that's going to be quite dependent on what we see on inflation around the world, not just in the US, and how that's panning out. The Fed's not just watching what's going on in the US markets, but how inflation or deflation is popping its head up all over the show. And so the timing of that's going to be super important as to how we time these trades. But generally, swings up and down with a general bias towards a stronger stock market and an averaged out dollar going into the elections, or at least the middle of the year, and then a move down, perhaps a big blowout top, depending a lot on what happens in the election. So that's currencies and the dollar and the stock markets. So those will follow suit. So we've got some short trades on right now on NASDAQ and S&P. I think we could pull back. I don't have my proper charts on here, but we've got some good channel supports on both of these. Let's just I'll take S&P for example. So generally, this is just a general idea. I'm not doing any detailed analysis. We could get a pullback from the top of this megaphone, or where we are now. This is the S&P day chart, back down to the bottom of the megaphone. There's the 20-day moving average. We're too far away from it. We need to pull back a wee bit. There's the 50, the 100, and the 200 still miles beneath us. So we've got some place to pull back into, maybe down as far as 4580, 4600. We're at 4780 now, so something like that. And maybe a little deeper, I don't know, maybe even as low as 44, 45, but then begin a move up as we move into the year. So generally stocks down a bit, perhaps just some corrections along the way, including one soonish, if not now, followed by a rally into next year, continuation of the move up. Look for chances to buy dips in the stock markets. Look for chances to range trade the dollar and the currencies. We're not looking for big directions on those until a little bit later on into next year. But stock markets, I think we can buy the dips. Could be completely wrong. This is not trading advice, just this is what I'm thinking. Then it comes to metals and gold. Well, we're currently sort of stuck in gold at the moment. We're at this peak level here. I think gold overall is going to appreciate. However, I think if we have economic headwind, and I think if we see any threat to inflation increasing, I think if we see risk off, if any sort of form of liquidity reduction, anything along those lines may bring a bit of correction to gold. But remember, we've got political conflict going on, which I alluded to earlier in my previous video. And depending on how those play out into 2024, and they both will most probably play out into 2024. So we'll have an end to Hamas, Israel, have an end to Ukraine, Russia. And the way those are resolved is going to be really interesting, terribly sad. And please never let me detract from the horrific happenings going on in those places in the world. And the sooner they get resolved, the better. But the way they're resolved will be incredibly fascinating, really. In terms of all sorts of factors, that will also affect the markets and possibly even gold, and continually keep an upward pressure on gold. That's only one of the factors supporting gold. Depreciation of fiat currencies, the accumulation of gold by central banks around the world, the talk of, destruction of fiat currencies, and, this idea that gold is an indestructible, in terms of value, asset. Is the sort of idea. So I think gold could continue to appreciate, looking to buy dips on gold. So we're looking to buy gold, we're looking to buy stocks on dips, we're looking to range trade currencies. When it comes to commodities, same sort of thing. Now we've got a whole bunch of commodities. I've got soya, cotton, sugar, natural gas, WTI, Brent crude, corn, cocoa. We're short on cocoa at the moment. That's the only one we're in currently. There are too many factors involved in commodities to say, well, if the dollar goes up, commodities are going to go down, or commodities are going to go up, or vice versa, whichever. Too many factors involved, including politics and weather and transport and manipulation, thin markets on occasions, and generally just a bit of a shift show. So I don't know. When it comes to commodities, I like to buy at extreme lows. I like to sell extreme highs. Been doing that for a long time now. And that's generally the best approach. When it's in the middle, I don't really care too much about any commodity. But most of these are in the middle at the moment, including, except for natural gas, actually, which we're long on, and cocoa. Natural gas right back down at the lows, cocoa right at super high levels. Everything else is kind of diddling in the middle, so not interested in those. So when it comes to commodities, we've talked about the other things, metals and stocks and currencies. When it comes to commodities, look for extreme levels, always on the lookout for those. They provide excellent risk-reward ratio trades. And then what we've got here is Bitcoin. Bitcoin, I think, pretty much the same as stocks. I think buy the dip scenario for now. I think the dips could be more severe than stocks, and that worries me a little bit about gold as well. So we could get some pretty sharp pullbacks. So we've been shorting Bitcoin at these tops here twice now. We've taken profits on the dips, but we've exited every time at the bottom. I think eventually we're going to get a breakdown here. If we don't manage to break down and we carry on moving higher, it is a bit of an ascending triangle. Perhaps we'll get up to 46, 47, 48, somewhere around the sort of below the 50 level. Might be a good opportunity to sell for a big dip, big correction, and then a massive surge higher. That's my general idea. I don't really trade it except for when there are clear opportunities, maybe once or twice a month. US 10-year yield. Now this one is fantastic. It's just so dramatically down. Look at the RSI. It's the lowest it's been since 2020. That's March 2020. And that's a long way back on this day chart. There it is there, Friday the 6th of March, 2020. That's the lowest the RSI has been up until now. So it really is oversold. Now, we've broken down through the 618 fib. We've got the 786 beneath us. And the 786 is in this massive zone of congestion, which lasted months, if not years. So once we hit that zone, it's going to get messy. We're just touching it now. I think we're going to be bouncing around in here for a long time, somewhere between 3 and 4. I think perhaps we could trade that range, much like we were talking about currencies. We'll be detailing a lot of stuff on all of these charts in the coming days and weeks. So once again, if you're not subscribed, make sure you subscribe to the channel. And then these are the South African Rand currencies against US dollar, British pound. Whenever I get a dip on either of these, dollar rand, British pound rand, I buy these pairs. In other words, I sell the South African Rand It's a doomed currency, the way things are going at the moment. So that's that, and that's a bit of an overview. I hope you enjoyed it. I will be doing more detailed updates, probably from Monday. It's going to be a messy, quiet, choppy sort of week. It's the quietest trading week between Christmas and New Year, so not an awful lot going on, and a lot of eggnog and parties going on. Apart from that, not a lot of trading going on. So I hope you enjoyed that, and I'm going back to eat my bagel and have some coffee. Have a great trading day. If I don't see you before Monday next week, take care.